please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good morning. Welcome to Trading Hour. I'm Sonia and with me is Ekta. It's a fairly quiet day of trade, but don't be fooled by the absolutely flat movement you're seeing on the headline index. We actually touched a new high today and then we came off a bit. So we crossed that high of 10,490 and then we petered off a tad bit on the Nifty. But that doesn't mean that there's no action. The broader market is abuzz with action. So the mid-cap index is up about 0.5% and you have lots of individual stocks doing well. We'll talk about all that and more through the course of the next 1 hour. Hi, Ekta.
Hi, Sonia. Absolutely. I think it's a story about the mid-caps today as well. After yesterday's outperformance, after the fact that it was at a record high yesterday, it continues to consecutively for the second trading session be at a record high. And if you look at the margin of outperformance for the mid-cap index as compared to the Nifty on a year-to-date basis, it's tremendous. The Nifty is up 27% on a year-to-date basis and the mid-cap index at the same time has rallied around 42%. Sonia mentioned a lot of stocks in focus and one such stock is Jet, but the other ones include Maruti, which is at close to 10,000 odd rupees. We have Tata Steel, HDFC on fundraising plans and something like Edelweiss and Relige after that deal took place. But let's get to the story which is flashing on your screen. We understand that Jet Airways is looking to raise funds. Kritika Saxena joins in with exclusive details on who in fact might be in the fray to raise funds from as well. Kritika, morning, over to you.
Morning, Ekta. So just to put this into perspective, Jet Airways has been looking at raising funds for quite some time. Now, Etihad, remember, has a 24% stake in the company. As per the FDI limit allowance in the Indian aviation sector, there is a 49% limit. So there is space for other foreign players to come in over here. And we understand from sources that over the last few months, Jet Airways has been talking to multiple foreign players. Now, if you remember, they had inked and extended their code sharing agreement with Air France-KLM as well as Delta. So it was a three-way extension of the code sharing agreement into a metal neutral agreement. I think Sonia can give some more idea about what that essentially means. But we understand that after that, and even before that deal was inked, they have been in conversation with Air France-KLM as well as Delta to look at extending that even further. We understand from our sources that they are looking at raising capital from both the players. The talks are in initial stages, so the exact contours are being worked out. Can't get into the price yet, but we do understand that a 10% equity could be considered over here. What that means is that Air France and KLM could look at a 5% equity as well, and Delta could look at another 5%. How will this work? This will have to be a fresh issue. Given the fact that they need to raise capital at this point in time, they are looking at a fresh issue. There won't be any dilution from Etihad or from Jet Airways, and that was the contention at this point, that if at all promoters will be diluting, or if we will actually see an Etihad diluting. But again, Etihad has 24% stake. There is an allowance for 49%. So yes, these two players can come in. We did write to all three players. Jet Airways has responded to our query saying that we would not like to comment on market speculation. Air France has said the same. We are still awaiting a comment from Delta.
Oh yes, in fact, you know, San Jose, India is a big route that has a lot of air traffic, and Delta has been for a while looking to sort of capture that market, the San Jose Indian market, because of the number of Indians that you have in the Silicon Valley, etc. So I guess this is something that, you know, they could sort of make an inroads into the Indian market via this particular arrangement as well. For now, it's just fresh capital and fresh fundraising, but eventually the code sharing agreement will give a lot more legs to Delta and the other airlines as well.
Yes, absolutely. And Jet Airways, in fact, is at a fresh high in today's trade. Your call be on Jet Airways and the other ones as well.
Well, my call on Jet is that it's a buying opportunity as we speak. The chart suggests a significant upside momentum is imminent. Not only Jet, even Indigo is a buy. Indigo had a correction, it's in a trading range, but that range appears to be willing to break on the upside. So both the airline companies are buying opportunities for the momentum trader.
Okay, that's the airline companies. Before I get to your stock, Sudarshan, I wanted your thoughts on Amara Raja batteries, because you know that stock is buzzing today. It's up about 4% odd. There's news that they will be investing about 700 crores in a new plant. So they definitely see more in terms of demand. But technically, how does it look?
Technically, the stock is an investment buy. It had a deep correction. It fell a lot even when the Nifty was going up. That correction seems to be getting over. So it is a classic buy on dips opportunity, but this is not a trade, not a day trade or a swing trade. If you are looking to invest, it's an excellent mid cap to buy today and for a longer term.
Okay, what would your stocks be, Sudarshan?
Yeah, but first let me tell you my 2 bits on the Nifty. The markets are in an uptrend. Yeah, all right. The markets are in an uptrend. That uptrend is intact. I would assume that sooner or later we'll have those real lifetime new highs, not the ones we saw in the morning, but real ones. That's hopefully in the offing. So stay with your long positions in the Nifty. Hold on. Keep a stop at 350, 10,350, and just stay with your positions. And focus on stocks because there's no need to add now to the Nifty. Whatever you have, stay with it. So the stocks are again only for buying. There's so many mid caps buzzing. I think we could simply close our eyes and then say, okay, we've picked 3. So I have not closed my eyes. I picked them with a lot of sense. But Marico is a buy. You know, the FMCG pack keeps on making news. It makes new highs. Lever did it a few days ago. Lifetime new highs. Marico is now willing to join the party of Lever, Dabur. So Marico is a buy. Indiabulls Housing has made a classic bullish head and shoulder. It's breaking out now. The correction is over. It's an excellent buying opportunity. And Glenmark, where the first signs of green shoots are coming. It's a risk, but it's still a buy that's worth taking that risk.
Okay, well, Sudarshan, your view on the Nifty is not your 2 bits worth or 2 cents worth. It's a lot of sane advice that we hear from you every time. By the way, HDFC Bank, that's the latest that's coming in. Of course, expected, the board has gone ahead and approved that fundraising to the tune of 24,000 crores. Of this 24,000 crores, maximum of 8,500 crores will be through the issuance of equity shares of face value of ₹2 each, and the balance will be through an issuance of convertible securities, depository receipts, basically GDR, etc., that they're looking at, a QIP as well. So that fundraising has come through. 24,000 crores is what the board has approved in terms of fundraising.
Okay, well, we have Lata joining in to take us through that. Lata, put it into context for us, because we had HDFC approve 13,000 odd crores, and today we have HDFC Bank.
Yeah, HDFC Bank's 24,000 crore, 8,500 crore will be raised from HDFC itself. Yeah. Now, that means it looks like it's going to be a 5% dilution in the first place. Okay. You know, it's about 1880 the last time I checked HDFC Bank share price. Yes. So at 1880, if you divide, it would be what, about 10 crore shares, thereabouts? Wait, I'll tell you what, 4.5 plus 4.5, 9, I think 11 crore shares, right? So 11 crore shares will work out to a dilution of about 5%.
4.5, yeah.
Between 5 and 6%. I think post-issue it may be 5% then. And the long and the short of it is that about 1.76 or 1.77 crore shares will go, 77%, sorry, will go to HDFC itself. Yeah. So it looks like HDFC, which until now had a 21% stake, will end up in the post-issue with a little more. I think they will end up having probably 22, 23% of the post-issue capital of HDFC Bank is my guess. I mean, I'm doing a very, very rough arithmetic.
So, Lata, you know, HDFC Bank is raising 8,500 crores via HDFC. The remaining 15,500 crores is going to be via QIP, ADR, GDR. So, I think it's in order to maintain HDFC's holding in HDFC Bank, post the 15,500 crore.
It will more than maintain is what I'm saying. Yeah. It will not remain at 21%. At the moment, it's 21%. But if it is to be maintained at 21% of this 24,000 crore, 20% only should have gone to HDFC. But 1/3 is going to HDFC. So it looks like at the end of the capital issue, you will find HDFC's stake rising to maybe 22, 23%. The exact number will have to be calculated. Because if it was only 20% that they continue to maintain, then HDFC would have picked up only 5,000 crore of this 24,000. Since they are picking double, 8,500, it is very obvious that HDFC is going to increase its stake to maybe 22%.
But this 15,500 crores, what is the need for that? And I think it's fundraising
need is quite clearly growth.
A while.
When HDFC Bank is growing at 20%. So although I don't know, their current capital adequacy should be very healthy at about maybe 12% or their 12, 13%. if you grow at 20%, then you definitely will need capital. And is this not the best time to go seek capital? The only trouble for them is that HDFC is counted as an FII. And therefore, the amount of shares available for the domestic investors gets reduced to that extent, because more than 74% cannot go to FII plus FDI. Otherwise, they could have even raised more. But this is clearly growth capital that HDFC Bank will perhaps, they will need growth capital almost every 3 years. I wouldn't be surprised that, they're picking this time because it's such a good time to ask for money.
Okay, well, that's that about HDFC Bank's big fundraising. 24,000 crores is what the board has approved, and 15,000 crores will be via a GDR or the QIP route. The remainder 8,000 crores via the issue of equity shares. The stock has moved up now, up 0.6%.
Yes, well, I think we still have some with us. So I think we have those Twitter queries like we do always to address. The first one is from Akhil. He has 500 shares of Yes Bank, which he's bought at a price of 331. He wants to know if he should accumulate more and if he can hold on for a period of 2 years. Sudarshan?
Well, yes, I think he can accumulate more. Yes Bank has probably completed a small and minor correction. So this is a buy on dips opportunity again, and he should hold on for two years. There's no doubt you must hold on to any private sector bank that you have. So hold.
Okay. The second query, Sudarshan, is from Hamid, who has 1,000 shares of Vedanta at a price of 185 and also 1,000 shares of Madison Sumi at 300. What's your advice on what to do with those?
Well, they are blue chip companies. Hold on to both of them. With Vedanta, have low expectations because the commodity cycle itself may be topping out at least for some time. But it's a blue chip, and we can't actually call a top so quickly. Just stay with it. Madison Sumi could double in the next few years. So just stick with your shares. Hold.
Okay, hold on over there. That's the word coming in. Thanks for that. But let's get some F&O strategies as well. Chandan Taparia joins in. Chandan, what's on your list today?
Yeah, we have seen the strong momentum in the Nifty auto index, and most of the auto as well as the auto ancillaries companies are likely to do well. So I have selected to go long on Bharat Forge now. The stock has surpassed immediate hurdle of 712, 715 and taken support at its 50-day exponential moving average. So expecting a fresh leg of rally, one can buy with a stop loss of 712 for an upside target towards 760, 765. Second trade I have selected from NBFC segment, that is buy on L&T FH. After the correction of last 6 to 7 weeks, the stock has taken support near to 160 zone. It has seen the positive divergence on the price and the indicators, and also given a consolidation breakout above 170, 374 zone. So expecting a positive move led by short covering activity, one can buy by putting a stop loss of 172, and the stock has potential to head towards 185 to 186 level.
Okay, all right, Chandan, we're going to leave it on that note. Thanks very much for joining in and speaking to us. Well, we do see incremental gains which are actually coming in. So let's concentrate on the Nifty now, because we're seeing that little bit of move which has come in courtesy the HDFC twins post the HDFC Bank fundraising which is approved. So at around close to 1,900 rupees for that stock now, it's up around 0.4%. So you're seeing that little bit of a push which is coming for the entire Nifty from HDFC Bank and the incremental news that we got with regards to fundraising there. But separately, it is the mid-cap index which deserves mention as well. We have the mid-cap index which is now at the high point of the day, so it's up around 0.5%. We have Manish Oswal, Senior Research Analyst at Nirmal Bang, joining in just to discuss the HDFC Bank fundraising. So Manish, put it into perspective in terms of the kind of, the kind of stake that HDFC is going to hold in HDFC Bank post this entire fundraising of 24,000 odd crores, which includes 8,500 crores from HDFC.
So after this fundraising, HDFC Limited's holding will increase from current 21%, including the ADR, this thing. And if we exclude that thing, then it is 26% currently. So the holding will increase. And secondly, HDFC Bank, after the raising capital, the Tier 1 ratio also increased around 350 to 400 basis point. So overall, the position of the HDFC Bank at Tier 1 ratio also increased around 350 to 400 basis point. So overall, the position of the HDFC Bank at it, because if you look at the entire private sector banks, all other banks raise capital. And now the HDFC Bank with this kind of fundraising, they are one of the strongest bank in terms of Tier 1 position and the branch network and everything.
Okay, that point is taken. But for HDFC, I just want to clarify, how much will it increase to? You said 21% would go to 26.
21% including ADR,
Okay.
is, that will go to 26%.
Okay. The 15,500 odd crores, what kind of demand do you see for HDFC Bank once they hit the markets?
So, I mean, demand will be very good because in terms of valuations and even in terms of growth rate, it's a very good compounding story for the long-term investors. And secondly, other entities like, they have a subsidiary which is also doing exceedingly well. So over the medium term, that company also have an unlocking of value. So both the sides, the long-term investors demand for the stock like HDFC will be very strong, and I don't foresee anything negative in that.
Okay, fair enough. Manish, we're going to just leave it on that note. Thanks very much for joining in and speaking with us. So that's a quick word coming in from Nirmal Bang, and you can see HDFC Bank now close to that 1900 rupee mark per share. Well, stable for the markets, like we mentioned, it is the Nifty which is now at 10,479. So maybe we're making a dash slowly and steadily back to that all-time high of 10,494, which we had touched right at the start of the trading session. So let's see whether that culminates or not. For the Bank Nifty, we've recovered from the day's low, so we've flattened out for that index as well. But Manisha Gupta is now with us to tell us what she's spotting in the commodity and the currency space. Manisha, over to you.
Ekta, thank you so much for that. And remember, it really is about rural and agriculture theme that we really seem to be following in last 2 or 3 days now. And while, of course, seeds, fertilizers are as important, what also is of most important, of course, is storage and warehouses of many of these agriculture commodities. That is where India really lacks when it comes to infrastructure on that. Well, in the latest release that has come in from WDRA, it says that they are looking to ban the issuance of warehouse receipts in paper. The warehouses can issue receipts, negotiable and non-negotiable, but it is not to be issued in the physical form, is what is latest coming in from the WDRA. Just to refresh your memory, it was the food minister in the month of September who had launched electronic negotiable warehouse receipt system. This is expected to provide security and a speedy arbitration process as well, and is expected to take the whole warehousing receipt system to a next new level. We already have seen a couple of these kind of receipts being issued, the e-receipts that is, in last couple of weeks, and it is only expected to grow on from here on. Joining us now is Aurobindo Gayan from Kotak Commodities to talk more about that and also give his sense on strategies for many of these commodities. Aurobindo, hi, good to have you. Agri trading, as we see in the derivative market, has seen a bit of a reforms coming in. 2017, of course, has been a positive year in that sense. What is your sense now with the warehousing, as has been an issue in sense of quality, delivery, etc.? That really seems to be changing. How do you see that taking forward?
Well, I would say I think this is a positive move that government has taken. I'm sure earlier we were talking about spot future integration. So this is one of the steps that probably leading to that spot and future market integration is something that can be seen in future. I'm sure several steps have been taken by SEBI, and the CDAC member is also very active in this phase. I think it's all going to be a positive move, and agriculture commodities have been doing well nowadays, and since the Rabi crop is going to start maybe in another few fortnights from here, but then overall it is all looking positive.
Oh, well, absolutely, and this really will change the whole name of the game. With the receipts now will not be issued in the physical form. They can be negotiable or not negotiable, but they have to be done as in sense of e-receipts only, is the, of course, release coming in from WDRA. But let's take a look at the commodity prices also, Aurobindo. And how are you looking at the crude oil prices? Because we've seen further gains come in for here. 3,700 on MCX is holding. How much further, how far or up do you see that going?
It's going up slowly. One thing that we have seen that $57 is slowly breaking onto the higher side. And as we have been also hearing that $59 seems to be a very strong resistance. Until that is broken, probably we'll see a very steady rise in the prices. And the Indian market, I think, since it is broken $3,700 rupees, I'm sure some more gains could be seen. And we continue to hold a buying view on crude oil, although the targets are going to be very limited. So I think crude oil would trade in the range of 3,670, the lower side, 2,3770. So any dip in the prices should be a buying signal for crude oil.
Aurobindo, quickly before we let you go, any sense that you're making in what's happening for the metal prices? Because the kind of policy changes that we're hearing from China and US to come in as we come into 2018, how much of that effect do you see on prices?
Well, industrial metals have done well in December. Almost all the metals have actually performed onto the positive trend. So I think some more positive trend is pending on the metals. And I have been always saying that zinc is still looking always positive. So I'll continue to hold a bullish outlook on that. Okay. Besides that, nickel is also looking positive, so one can look for buying for the short-term targets for both these two commodities.
Okay, all right, Manisha as well as Aurobindo, thanks very much for joining in and talking to us. Well, one company which is in focus, and before we get to that company, I want to introduce Lata into the show, considering that Sonia's got a bad cough, so she had to leave midway. Hi, Lata.
Oh, hi. Well, quite clearly, Sonia and you have brought Raunak into the equity markets off the day's lows for sure. And the Nifty Bank almost, well, it did go into green terrain and now, well, in flat terrain. So it looks like the market is now trending higher. We thought that 10,494 was a flash in the pan and that we've pulled back meaningfully from there. But now we are once again within shouting distance of perhaps more meaningfully crossing the previous high of 10,490. So don't rule out a fresh intraday high and a fresh closing high on the Nifty today.
Yes, absolutely. So that's what's basically happening with the markets right now. But we have one company in focus. Team Lease is buzzing on the back of a Motilal Oswal report in which they have reiterated the buy call on the company. We have Ravi Vishwanath, the CFO of the company, joining in to just discuss the overall business outlook as well. Ravi, hi. Thank you very much for taking the time out. Well, you know, I just wanted to start by talking about how the trends for Q3 are looking, because Q2 was quite steady for you. You had a very good, you know, revenue growth of around 20-odd%. Is this culminating in Q3 as well, or is there some seasonality which seeps in?
Hi, good morning. Q2 was actually a bit tepid for us with the introduction of GST. And we've always said that the tepidness in the markets continued for us in Q3 as well, because most of our clients were just grappling with the provisions of GST, the filings of returns, and so on and so forth, lots of other matters. So we did say that we were expecting Q3 to be a bit more softer all along, given that, you know, it's only now over the past month that a lot of clarifications have been issued by the government on the GST, which is making it a little more easier for businesses. So that is what we have always said, that we do expect the softness in the market to continue into Q3 as well, but we do expect markets to start picking up from Q4 onwards.
Okay. When you say pick up, well, good morning, Ravi. When you say pick up, what kind of revenue numbers or any other kind of growth indicators can you estimate at this point? We've never given any kind of guidance to the markets. All we've said is over a longer term, we will continue to grow the company at between 20 and 25%. Actually, like when I say long term, say over a 5-year period, we always maintain that our growth rate will be in the 20 to 25% range, or say over the next 5 years. Okay. Is what we have said. What may you end the year in terms of workforce? I'm sorry, I will not be able to talk about that. Yes. Okay, what would be the split in that case? I mean, I think last time you said that about 20 crore of your 46 crore were in agri and the remaining were in services, manufacturing, construction. What may be the split? Will it continue that way?
Those splits are so huge that it's not going to make a
big difference.
It's not going to make it's not going to move the needle in the short term at all. You know, I mean, these are longer term. These are longer term changes that will occur with the introduction of GST, with reforms kicking in. You know, with all the filings, all the labor filings,
Ravi,
all the filings going paperless.
Ravi, I'm not asking you with an idea of trying to get to your EPS or your EBITDA. I'm asking you more because, you know, what is the constant theme we hear? Jobless or jobless growth. So, you know, I'm asking you about your staffing requirements or the pressure to increase it, more to get an idea as to whether the economy is creating jobs.
See, the economy is definitely creating more formal jobs.
Okay.
Which is what
you supply.
Which is what we supply. Yes.
Okay.
You know, and the formal jobs, I mean, like I said earlier, there are about 180 million people who work in the informal sector today, outside of agriculture. And of the 180 million people that we are speaking about, we have almost close to about 30 million in just private and public limited companies, government and PSUs.
Okay.
So even if you want to take these as the low-hanging fruit, I'm just saying, the 30 million people, that's the first target that we are probably going after.
Okay. Can you give us a sense in terms of what exactly the cash generation has been for the business for this fiscal up till now?
I lost you there. Could you please repeat?
Free cash flow is what
free cash flow.
Yeah, we've always maintained. Us as a business, though our margins are small, we follow what's called a collect and pay model, where we collect. So we don't sit on receivables really. You know, the lower margins is actually kind of more than compensated by the collect and pay model, which is what happens in 80% of the case. So therefore, the large part of the business, which is the staffing business, runs on a negative working capital cycle for us, actually.
Okay. You know, Ravi, one would have imagined that in the first burst of GST, there would have been a slowdown even in your business. And then I guess a V-shaped recovery. Can we call it that, a V-shaped recovery?
You can't expect a V-shape. You probably it's more a U-shaped actually.
Okay. Yeah. Okay, but the disruption isn't over. I mean, you're seeing the limping back to formal sector still underway.
Yes, that's right. That's right, yes.
Okay, so all right. We'll leave it at that. Thank you very much.